Today's highlights: Bitcoin continues to cool down and pull back, and Ethereum is also slimming down. Can the expansion of crypto ETFs really not drive the market up? Trump is still crossing over into the crypto market. Will he face multiple games of strategy? When will this round of bottoming out finally end? Measuring the world anew with cryptocurrency, mastering the 24-hour wealth code, and gradually becoming wealthier together. Wednesday, December 31st. This is the TV Chinese channel Bilibili Hezai. I'm Michael. Tomorrow is 2026, so first of all, Happy New Year's Day to everyone. Let's take another look. Everyone is asking whether this round of Bitcoin's pullback has reached the bottom and whether it's a panic sell-off. Looking at the on-chain data, NUPR has already fallen back to near zero. What does this mean? It means the market is right around the break-even line, not in a state of total loss or widespread panic. What happened earlier was that the price surged too quickly, but confidence didn't keep up, so NUPL wasn't able to climb above 0.6 again. Essentially, the money moved faster than the sentiment. So as this round of pullback unfolds, the first to be unable to hold on will likely be the short-term funds. A lot of the funds that chased the highs have already been shaken out. The NUPL for short-term holders once dropped close to the zero line, but if we look at long-term holders, they're still in a stable position and still sitting on profits. This kind of structure is very common in history. This isn't a crash, it's just a slowdown. Simply put, the car was going too fast, so we're tapping the brakes to take a break. Now, if we look at Bitcoin, it's stuck at this awkward position around 88,000, neither up nor down. The indicator for short-term holders, STH-SOPR, has been fluctuating around 1. What does this mean? As soon as prices rise to their cost basis, short-term funds start to cash out. No one wants to hold on even a little longer. So it's not that there's no money in the market, it's that there's no confidence. As soon as the money gets warm in their hands, it's used to settle up and leave. This kind of situation is very common in history. Usually it's not the start of a major bull market. It's more like the market is catching its breath halfway up the mountain. As long as the SOPR for short-term traders can't stay firmly above 1, the market will have a hard time truly trending upward. It will just keep oscillating, dragging out the process and wearing down everyone's patience. Only when this indicator consistently holds above 1 every day does it show that short-term players are no longer in a rush to cash out. Only then can market sentiment truly recover. Otherwise, it's highly likely that we'll continue to see back and forth tug-of-war during this bottoming phase. During this period, sudden downward spikes and secondary dips are most likely to occur. Now, let's look at Ethereum. To put it simply, Ethereum is quietly slimming down right now. From $1.68 trillion at the beginning of October, it has dropped all the way down to about $1.15 trillion, which means a total evaporation of $530 billion. The impact is quite obvious. So this isn't the kind of situation where prices drop today and rebound tomorrow, causing emotional swings. Instead, it's a slow process of bleeding and continuous weight loss. Even when it comes to rebounds, Ethereum can't even be bothered to bounce back a little. So the money on Ethereum isn't being scared away, it's quietly leaving on its own. Capital is starting to feel that the risk just isn't worth it, so it's pulling out first. The market is being honest. There's no noise, no drama, no panic, but also no one stepping in to catch the falling knife. So what does Ethereum look like right now? It's like a piece of gym equipment that nobody uses. It's just sitting there, but everyone walks around it. As long as no new capital comes in, this slow, cruising, declining state of Ethereum is likely to continue for a while. Alright, please like this video and turn on the notification bell. I'm here to help you sort through the news from the past 24 hours in the Web3 world that's closest to making money. We hope that by organizing this news, you'll be able to build up an intuitive understanding when you enter Web3, which in turn will support you in making rational decisions. So our membership is all about teaching you to use simple indicators to build up your market intuition, establish your own trading system, and set your trading principles. By joining our membership, from Monday to Friday, we'll provide you with a basic small cap coin each day, letting you know where to buy and where to sell so you can experience the fun of trading. All right, let's take a look at the news headlines. Today, we're still focusing on the current round of corrections in the crypto market. On the surface, gold is rising, silver is rising, and the crypto market seems quiet, right? But beneath this calm, the crypto market is quietly shifting its foundation. Coin prices aren't skyrocketing and the hype has died down, but what's really happening behind the scenes? Wall Street has already started treating Bitcoin and Ethereum as legitimate assets and is integrating them into their systems. In the past, the crypto market was driven by retail investors, fueled by emotions and future narratives. Now, the financial system is quietly taking over the crypto space. So, as you can see, once the ETF channel was launched, the crypto world stopped being a wild, unregulated space and was instead packaged into the fast lane of mainstream financial assets. If in the future it becomes integrated with traditional settlement systems, just imagine the possibilities for fast, low-cost financial and cross-border settlements. How could this impact traditional finance?
Since the Bitcoin Spot ETF launched in January 2024, it has seen a net inflow of approx. 57.7 billion. Since the Ethereum spot ETF launched in July 2024, it has seen an inflow of approx. 12.6 billion. During the same period, the Solana spot ETF, launched in October 2024, attracted about $92 million. The XRP spot ETF saw a cumulative net inflow of approximately $883 million. Overall, mainstream crypto assets are continuously being incorporated into traditional finance allocation systems.
Or will have a place in portfolios moving forward, like you mentioned. I can't say too much about the filings, but we're really excited to be able to bring some of these strategies that we've already managed in European markets.
The first multi-asset spot crypto ETF in the US has launched, covering around 19 digital assets. Simultaneously, the US SEC relaxed unified listing rules for commodity-based trusts, no longer requiring individual approvals. Currently, about 126 crypto products still await review. The inclusion of defined meme coins and index-based products marks that crypto assets are accelerating their entry into the mainstream financial system.
So we've been doing daily broadcasts for almost 6 years now. By organizing and analyzing this kind of big data every day, our goal is for you to truly sense that the current environment is really different. In this market cycle, it's not about how high you can chase or whether you dare to jump in. It's about whether you are qualified to participate. Who will be able to stay? If you look at today's ETFs, what do they resemble? Isn't it like an identity verification process? Only those with a clean background, strong enough liquidity, and the ability to withstand institutional scrutiny, the so-called legitimate players, can enter this circle and obtain an identity. Just bringing another PPT, another story, or another expectation and taking advantage of market hype, these kinds of projects no longer work. So price is no longer the only standard in the crypto world. What matters now is your structure. That's the real key. So ETFs are no longer responsible for pumping prices. They've now become a screening mechanism. Those who remain are the qualified players, while those who are filtered out will return to the pool of speculation, left to fend for themselves. So in other words, this round of the market is different. And in this kind of environment, with this kind of structure, every pullback determines where your base pool will be in the next rally, what your vision is, and whether you can make money. It all comes down to how you handle each pullback and sudden dip. On December 23rd, did anyone notice on Binance that the USD1 to Bitcoin trading pair suddenly spiked down to over $20,000 in an instant? What does this mean? This shows that the trading depth is extremely insufficient. But this time, what Trump is going to launch isn't an NFT or an airdrop, but rather he's going to integrate USD1 into all the daily trading routines, and both competition prizes and daily incentives will have to use it. So real-world application is extremely important for USD1.
According to the plans disclosed by both parties, the US dollar stablecoin USDE launched by Wi-Fi will become the core settlement tool within the MMNC ecosystem. Its design goal is not to hype up the price, but rather to use the stablecoin mechanism to turn activities like training, learning, and watching matches into a value system that can be recorded and settled. The on-chain experience points, XP, that users earn can be exchanged for benefits, creating a long-term incentive structure centered on behavioral contributions.
A good stablecoin combined with boxing, and when the Trump family gets involved, everyone's first reaction is never, here's a great opportunity, let's jump in. Instead, it's always, what is Trump up to this time? Which sector is about to get wiped out? So from NFTs to private coins, and now to stablecoins combined with the fighting industry, Trump's playbook is very simple. Just change the packaging, tell a new story, and hype up the emotions. If you really think this is about setting ideals for the crypto industry, I think that's a bit too naive. It's more like a well-oiled narrative machine. We all say that narratives won't work in the future, but when it comes to Trump, I think he can still use hype, traffic, and emotions to get people to jump in and then play the same game again. In Trump's logic, it's never about whether you can play or not, but about who ends up holding the bag, rising on one side, collapsing on the other. Pakistan, backed by Changpeng, is starting to push into cryptocurrencies, while Iran's fiat currency is depreciating every day. Web3 is facing dual pressures. Let's take a look at Pakistan. Recently, Pakistan has been appearing very frequently in our daily reports. Why? Because this is a shift in a national narrative, a living example. In the early days, Pakistan's attitude toward cryptocurrency was, I'm watching you. But I didn't dare to get involved. But now, they're rolling up their sleeves and getting in on the action. Look, regulatory agencies have been established, exchanges have been given the green light, and they've started researching Bitcoin reserves. Binance's Changpeng Zhao and Huobi's Justin Sun have both been invited to serve as lobbyists, disciples, and advisors. To put it plainly, this means that at the national level, they've finally figured it out. Instead of just watching from the sidelines, it's better to get in on the action, bring in the money and set the rules while things are still chaotic, and while the whole market hasn't caught on yet, pull it over to their own side first. That's why both Changpeng Zhao and Justin Sun have personally given their endorsement. This time, Pakistan isn't just testing the waters, they're looking to play for real.
According to official data, by the end of 2024, crypto users exceeded 20 million, trading volume nearly $300 billion, top 10. The government established a national-level crypto asset regulations and created a digital asset committee. It regulates stablecoin trading platforms and on-chain finance, formally integrating crypto into the financial framework.
This is not a policy announcement. It reflects a way of thinking and marks a shift within the institution. This is about the future. The no objection certificates granted to Binance and Huobi are the first practical steps of this new mindset.
Zhao Changpeng pointed out that Pakistan is among the few countries that simultaneously enjoy both a demographic dividend and a policy window. Over 60% of its population is under the age of 30, and the adoption rate of crypto wallets ranks among the highest in emerging markets. As the regulatory framework becomes increasingly clear, Pakistan is shifting from being a participant to becoming a builder, with the potential to become a regional crypto hub. Zhao Changpeng believes that the real opportunity does not lie in speculating on prices, but in who can be the first to establish compliant and sustainable financial infrastructure.
All right, Pakistan can be considered an old friend of the Chinese people, a place where the financial sector is quite underdeveloped and the economy is not very advanced. However, the Pakistani government also understands that opening up finance or embracing blockchain is a way for ordinary people and small and medium-sized business owners to get a seat at the table. So for Pakistan, in the past, money couldn't go out or come in. The financial system was like a semi-closed courtyard. But now, thanks to the relaxation of crypto policies, you can see trading platforms entering the market, infrastructure starting to roll out, and funds that used to circulate in the gray area can finally come into the open and bask in the sunlight. So to put it plainly, Pakistan isn't speculating on crypto. It's looking for lifelines for its economy, injecting blood into its veins. Now, let's take a look at which countries are still cracking down on digital assets, stablecoins, and blockchain technology, firmly saying no to them. These countries will eventually end up like Pakistan did in its early days. That's the only path available to them. Now, although Pakistan is a third world country with an underdeveloped economy, it does have a democratic system. As long as the people's rights can still exert some checks on the government, its financial situation won't look too bad. That's why, throughout 2024, the exchange rate of the Pakistani rupee against the US dollar has remained stable. Of course, in 2025, there has been about 5% inflation, and now the exchange rate is roughly 285 rupees to $1 US. Now, let's look at another third world country with an authoritarian regime. What is Iran experiencing right now? The people's wallets are shrinking day by day. On the surface, it looks like banks in various countries are all collapsing. Tens of millions of Iranians' deposits were completely wiped out in a single day. This is even more dramatic than a stock market crash. On top of that, with geopolitical tensions rising in July this year, the market sentiment in Iran has completely collapsed. Now, everyone in Iran is holding USDT. This is no longer a question of economics or patriotism, it's a matter of survival.
Iran's economic crisis has fully erupted, with the rial falling to a historic low against the US dollar. People's assets have shrunk drastically and public dissatisfaction is spreading rapidly. The central bank governor, Mohammad Reza Farzin, was forced to resign, further intensifying market panic. According to the Financial Times, since the escalation of the Iran-Israel conflict this June, the rial's purchasing power has dropped by more than 40%. The current exchange rate is about $1 to 1.4 million rials. The Human Rights Foundation points out that in the 1980s, $1 was worth only 70 rials. In 40 years, the value of the currency has almost dropped to zero.
Iran has been witnessing massive protests. Iran's national currency has almost collapsed, and people are struggling to make ends meet. The rial, that's Iran's official currency, has plunged to a new record low against the US dollar as the economy spirals. Angry Iranians took to the streets, protesting against soaring inflation and worsening living conditions.
So now ordinary Iranians are really caught in a dilemma. If they keep their money in the bank, it loses value every day. But if they want to buy some Bitcoin as a hedge, they find out that mining is illegal, transferring coins is illegal, and even storing coins is illegal. So when the BitVice boss says lightly that Bitcoin can resist inflation, in reality, even if you want to use it, you're not allowed to. But the Iranian people need to understand, even though this document has 13 official stamps on it. But you have to ask, where are the tools for it? If you insist on using it, how do you prove you own these digital assets? So all they can do is scare off those who are timid. In this world, the most profitable things are always written into the criminal code. If ordinary people want to protect their assets, you have to be bold and unrestrained. You need to know. Don't overestimate their methods, but don't underestimate their determination either. All right, let's look at the news update.
Weishan put it very bluntly, the issue isn't about how much money you can make. It's about whether power is kept in check, as long as power is out of control, no matter how compelling the narrative is. It won't matter. On December 31st, gold quietly climbed up again, breaking above the $4,350 mark. The increase wasn't big, but the message was clear. When the market hesitates, gold is once again being used as a safety net. Meanwhile, the crypto world has finally made its way into Hollywood. Netflix's new film, One Attempt Remaining, turns the story of forgetting a wallet password into a romantic comedy where ex-lovers team up to recover their crypto assets. Forced to team up again, the film is directed by Kay Cannon and stars Jennifer Garner. Just as some were calling to stock up on Bitcoin, they immediately hit the pause button, while others, backed by David Beckham, had just made a high-profile entrance. But in the blink of an eye, they retreated, putting on a real-life display of a crypto emergency stop. Musk put it very bluntly. I'm rich not because I play the stock market, but because I actually work. The more Teslas we sell and the more rockets SpaceX launches, the harder we work, the more my wealth grows. In other words, his fortune doesn't come from making money with money, but from making money by working. If you want to make him richer, just buy more cars and launch more rockets.
All right, this next joke is pretty funny. It goes, people who get weekends off are called cattle and horses. Those with only one day off are war horses. And those who never get a break are merry-go-round horses. Even beggars check the weather before they go out to beg, but here I am, clocking in on time every day, rain or shine. Even justice can be late. So what's the big deal if I'm late once? I'm someone who loves to make plans. My short-term plan is to wait for the weekend, and my mid-term plan is to wait for the new year. My long-term plan is to wait for retirement, and my life plan? Well, that's just waiting to die. So he says, life has taught me one thing. As long as you're still working, you'll always be on the road. It's just that the direction of that road changes. It's really out of your control. If you understand what I mean, feel free to give us a like. That's all for today's program. Every day, we help you sort through all the important news in Web3. We hope this news roundup can help you as you enter this new investment track. Here, we've also organized some member benefits. We hope to lead all our members to ride this bull market together, gradually becoming wealthier. See you tomorrow.